morning to all traders and welcome to this Wednesday's market insights video provided to you by Orbex status. Here is the 6th of May today. We are of course expecting the EIA report. The API report yesterday was actually negative, should have caused a decline in the oil markets, but oil has been moving higher as we have seen over the past few days. This is of course as markets are reopening and demand is likely to increase. Not sure whether it's going to offset the current supply glut, but nevertheless, markets seem to be pretty excited about what's happening around the world. Now, gold, obviously, since risk appetite has been moving higher, then it was supposed to move lower as well. However, it was somehow supported above the 1700 handle. And that's because, of course, we've had the ISM non-manufacturing indicator yesterday coming out, and that has been like to record decade lows. So that has actually helped the gold remain above the 1700s. However, we don't know whether this is going to continue being the case. I mean, we've talked about both the oil and gold last week, and I'm going to go today and just revisit those charts to see where we're standing, starting with oil. We're talking about this being a 3, 4, and 5, right? I'm still seeing this as a wave 4 over here, correction. We've had waves 1 and 2 done, and we've had a leading triangle here in the minute degree, 2, 3, we're going to get a 4, 5, then we're going to complete wave 3, then 4, 5. This is going to be wave A. Then we're going to get wave B, and then we're going to get wave C. Wave C looks like we're going to actually head for this descending trend line that comes actually up from, I mean, I don't even want to go up there, to be honest. It's like probably like the 70s, the 80s also. This trend line now, if taken out, it means that primary wave 2, this is actually coming in intersection with that wave, right? And that we're talking about, I mean, above the 40 level as well, right? So there is still room, of course. I mean, we could see this happening maybe by the end of the quarter or maybe even lower down the line, right? Now, with this move over here, okay, and by seeing the RSI as well, suggesting that there is going to be a decline, we could get this actually happening today because we also have the EIA report coming in. Although the API was disregarded, was discounted completely by the markets yesterday due to the risk appetite, we might see this actually, the EIA, since it has a bigger effect in the markets as well, taking the oil into fresh lows for the week, maybe near the 2150 levels also, and then move higher to take out wave minor 3. Then we're going to have 4 and 5 to take out wave A. Now in the gold markets, the metal, we are here. The metal is moving exactly as we were expecting. This is wave 4, and we're still expecting another move to the upside to take out wave 5. In the minor degree, we see this is wave 3. Okay, so we've got 1, 2, 3, and we're still actually into the correction wave 4. We've had wave A done, waves A, waves B, and it looks like we're moving down for wave C. Now, due to its structure, okay, now there is 2 things that could have happened. One is that we've had 1, 2, 3, 4, 5 over here, and we're going to get another 1, 2, 3, 4, 5 down, which might not be really the case, to be honest. Or the other scenario would be that this is becoming a little bit more complex of a scenario, right? Which means that we would have to move wave B here, and this would become A, then A, B, C to get B, and then we're going to get then prices again moving down in a 5-wave move, impulsive move to take out wave 4. Okay, now this has to go below the 1660, right? We need to take that low out to consider this as a validated correction. Otherwise, what could have happened, or what is indeed the case, could be that we'll have wave 3, 4, and 5 over here, which means that this is wave 1, this is wave 2, and this is actually going to be wave 3, then 4 and 5, and we're actually looking at this being the reversal point that we've been waiting for a while now, right? This would suggest, of course, that this is a leading triangle over here, okay, 1 and then 2, 3, 4 and 5, which obviously is going to take us definitely below the 1640, and then we should be looking at this actually being validated below the 1550. Okay, they're still far, but in the short term, we are holding above, below the 61.8 Fibonacci retracement over here, okay, at 1712. So I'm still expecting any rallies to give us a good opportunity to the downside, to take out at least previous wave A and then shoot higher. So this will be all for the day. I would really pay attention to the EIA report today. It's the only significant event, I will say, along with EU retails. Thank you for watching, and I will speak to you again tomorrow.